The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and of course 2 hours of Steve Rhodes, and then comes the Tiger Technicians Hour at 11 o'clock, and 11 o'clock till 12 every day, Monday through Friday, every market day I should add, and my pleasure to be here. And what is my service? My service is, besides the Tiger Technicians Hour, my service is the opening call. It's just a daily newsletter, the intensive newsletter. It goes through all the different parameters to look for in the most important indices every single day, whether it's the GLD, the TLT, the Diamonds, the SPY, the Qs, the Dow, whatever it is, S&P, the very comprehensive report every day on the volatility index, what it means, what you can look for, how I use it, and of course some other proprietary indicators. But most importantly, it is the Chapman wave, where we identify the most obvious low bar, and from then you look for 4 consecutively higher peaks. The fourth peak is labeled uppercase A, B, C. D is the fourth peak. That's where you got to be careful. You can go higher, but that's where we take note of potential reversals, and as well as a recycle to the upside. That can happen to the downside as well. So what am I showing right now on Tiger TV? You can see I've got the E minis, the September contract. Wow, it's almost end of September mini contract. That's amazing. What we're looking at, there was a pattern that I call the H formation, a large arch. Within that you get little scallops to the downside. This is an A that could fail if it goes under 1631.50. That's going to be the big test. The 120-minute chart has the same thing. Here's the 120-minute chart. There's that peak D right there, second peak D, after the low bar of 1631.50 back about the 21st, 22nd of August. Aha! No charts here. Nothing. Oh, wait a minute. I'm doing all this work, and you can't see the charts. Let me just do this. Try it one more time. Timed window. Got that. Got that. Got that. And the charts should be showing in the Tiger's Den. Wow, I did a lot of work. I was hoping you could see beforehand, before doing the commercial. Just tell me if there's a Y. Give me a, yep, there it is. Sorry, folks. Let's do that again. The E-minis right there. That's the daily chart. Went from the low of the 24th of June at 1553 to 4 consecutively higher peaks. Goes to the peak D, that fourth D, the fourth peak D. That's what I was talking about. At 1705, this is the future contract. And the 5th of August, it makes that, confirms the peak D the next day with a lower high bar. Look at the technicals. I showed that green line there at that peak C. At 1695, and look how much lower the technicals were right there on the 5th of August. Just a wonderful technique you can use in your own trading. What happens? It fails. Well, now we're going to try to use the same thing. This line here at 1631 on the 22nd of August, with the technicals at the lows, what are we seeing? Well, we're seeing the technicals in the MACD still very poor, but the stochastic is running. So we're going to watch this really closely. For my opening call subscribers, I would have to say, and I've been talking about this for a while, this is the most short that we have been in my opening call newsletter. Oh, I can't even remember when the last time was that we were this short. And it wasn't. I made a big point of saying, this is not necessarily a market commentary. It is a Chapman wave methodology consideration. I did what I had to do based on the technicals. I must just do this, if you don't mind. I need to know everybody's happy here. I want to make sure that you're all getting the different things that you're supposed to get. Let me just do this 1 second, please, if you don't mind. I'm going to go right here, and I'm going to click on right there. Oh, well, I'm having a little trouble. Right there, I believe. Yep, there it is. Okay. So I just want to see that the charts are set up and everything's looking good. Yes, there it is. I just needed to do that, and I'm set. Now, what I'm showing here is that in the daily, you've made that reversal in the arch formation with terribly weak technicals. Slight divergence right now, but I wouldn't be caring too much about that. Most importantly, the 120-minute chart says there should be a left side, right side price time match by the 28th. That's by tomorrow in the 120-minute chart to test the 1631.50 area. We'll see if that happens. 9-period moving average resistance at 1647, way up there. 1654 on the daily. I would just say that on a very short term, 1641 to 43 will be the really important levels to watch. Now, let's just do this real quickly. The Dow is down 94 at 14,852. The S&P is down 15 at 1641. The comp index is down 43 at 3614. I'll show you something very interesting in a moment. You've got gold up 24 at 14.17. Silver's up 52 cents at 24.53. Day is Tuesday, the 27th of August. Tuesday, 27th of August. You've got platinum down 22. Now, high-grade copper is acting very well. It's up 95 cents, 0.332. I'm going to talk about that as well, just as we move along. I hope to get to it. Just suffice to say that I'm looking at a rotational correction unfolding as we speak, and that we might find that there are pockets of strength in certain sectors, like the gold, which is still rallying. I've got leg C in the gold contract, and that says you should get to at least a D. And we are long. I'm opening call. With the shortest we've been in the market sectors. We've got a whole bunch of sectors. In fact, there's the most number of positions I have. I don't like that. It always makes me nervous. It takes a lot of time to cover all these different positions. But we are long a couple of positions and so forth. They're doing nicely. Now, this is very important. In looking at the copper, let me just move this away for a second. Is this really telling us that underneath it all there is, in fact, some improvement in the world economies? Is that what it's saying? I would prefer to say no. I don't say I say that right now, because until copper can get to the 360s, 370s, this is merely an oversold bounce, hugging the 200-period exponential moving average, which says that copper could go a little higher, and then it'll come back down. It'll mess around, just going up and down. We're using the 3.37 level as a fulcrum, if it can break above it at any point. Right now, I've got a leg D with a potential for a peak D, and I'm going to be watching that in the daily chart, and I still don't see terribly much of the downside just yet. But I can tell you this, if copper breaks under 3.25, it's at 3.33 in the continuous contract right now, that will be very poor action. All right, let's just run through this again. I want you to look at crude oil, CL. I'm going to go to the Z contract. Let's see if I've updated that. Yes, look at this. This, to me, this looks like F/B in the weekly chart is leg B in the monthly chart on the CLZ contract. Oh my goodness, I'm going to go through this very carefully now. And I would have to consider that this is E, let's see, E/A. Oh, I've got to type everything about 2-3 times to get it there. Okay, E/A, I was talking at the same time. Yeah, let me just do this. I'll be 1 second. No snap mode. Let's get out of that. This is E/A. F/B. Right now. And my eye is saying, hey, crude oil at 106.78, watch out. Why? Because if crude oil breaks above the old high, oh my goodness. The old recovery high, not the all-time high, the old recovery high of 108.59 made on in April of 2011. I need to just go to the continuous contract for a moment. I'm pretty sure I've updated that. Yes, okay, slightly different chart. I want to go with this one. Why? Because although it gets smoothed out and all that, I have enough information here to say that there's a really good chance that if crude oil breaks into the 109 to 110, 111 area, that would be considered a breakout, and the target would be, of course, not just the April high, but it could go higher. This is a very critical level. Now, let me also emphasize that if crude oil was to, as it is, how come the politicians aren't talking about, as they did with the last administration when crude oil was going, when it was way lower but going high, and they would say, crude oil, crude oil, crude oil. No one's even talking about that right now. Why? Because I've contended for years now that when the stock market, you remember I said that my assessment was that Obama would not get in for a second term, and then I said the only way I could see it is if the Dow closed above, I think it was 12,500, or 12,000 I think it was, and it closed much higher than 12,000 the week before the elections. That was a good part of it. And why? Because when people see the market going up, you can get stories that were sent to me today by one of my subscribers. Just a great article to read, because what did it do? It basically said Hampton's McMansions herald a return of excess. And what happens is that when markets are making, especially when they're making all-time highs, people tend to ignore other factors. And at this particular point, crude oil is not being discussed. Why? Because the stock market is at highs and people are kind of feeling a bit better about things. But wait a minute. Let's just go back to the crude oil contract, the Z contract. In the monthly chart, this is leg B. And what's very important, it's an overlapping B, which says be careful, because in the crude oil December contract, that 108.57 high of April of 2011, what happens is the cup formation says that if there's a close 2 out of 3 bars, that would be months, that's a long time, above that last peak, you have essentially broken out and you've raised the base and you could go even higher. I'm going to be watching this really closely. Now, I also wanted to talk about this. This is a tax, folks. This is a tax on everything. If you want to talk inflation, crude oil is the one element that can really do it, because it filters into just a myriad number of sectors and instruments that are used every day, whether it's plastics or whatever it is. It's like a tax. So we're going to be watching this closely. And now we've got two final things. Two final things. Bonds are rallying. Bonds at 132 and 20 seconds, up 21.30 seconds. I was going to go long the TLT, and then I thought, you know what? We have so many positions now. To have something that goes from the 130s to the 100, even in case it's 136, so 137, 38. On a percentage basis, there are better ways to utilize the money. But that's got nothing to do with the actual call, which says that in the 120-minute chart, actually, I did this on the TLT. Let me just see if I finished it here. Yeah, the TLT did the double bottom, that H pattern double bottom. I didn't finish. I was going to do it this morning. I just ran out of time. The TLT made a slightly lower low, and then it turns around. And that H pattern, the quicker you can break above the H pattern, the quicker and sharper and longer will be the move. And that's the move that we're looking at right here. There's the H. Oh, man, all these patterns that we talk about, they are all in my, not all of them, not the moving averages, but all the patterns themselves are discussed in my CD introducing the Chapman Wave methodology. Only TFNN has it. And I will get back and we will talk about one other factor. It's called the currencies. And I would have to say that the euro is rallying a tad, but it's really watching the dollar. And we'll be back and we'll talk about that.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Host Basil Chapman. We will take calls in a moment. I just want to go through a couple of things. Do you question, Jay? I don't do a question that Dan Basil on TLT 120 minutes. Do you count the extended hours bars? Actually, Jay, all I do is only the futures do I use the extended hours. Otherwise, it is purely the trading hours of the day. And I've stuck with that because I found that even though I get good readings with the after hours, it's so confusing when you get one trade go off at some point and you've got this little dot that stands there. So, yeah, for all the indexes and the cash indexes and the stocks, all of them I use only the printed 9:30 to 4 o'clock trades. That's number one. Number two is I wanted to just talk about yesterday we had a number of calls, and one Art was from the New Hampshire. I was talking to him about the E-minis. He wanted to look, he was looking at the E-minis, was thinking of going long, and I said, no. Let's look at this as a trade. And what I gave him, I said, in the 15-minute chart, there's a double top, and you could go short right here, and I believe that the price at the time was at 16.65.75, something like that. And I said you could put a stop just 3 points above. Mostly, I don't want you to go long. I want you to consider that I'm getting a top in place, and I think that there should be a pullback coming. And after the pullback, going into the close today and maybe early tomorrow morning, you could consider a long position. I do see an overbought situation. We're getting close to some kind of a bounce. But I hope that you were able to do that. You got yourself a good 20 points. That's a huge way of looking at it. Maybe by the end of the hour, I'll look at a trade. Certainly, from the VIX standpoint, let me just do this, and I'm going to go to calls. You've got the VIX. Let me VIX. Let me just see where the VIX is. There it is. From the VIX standpoint, the VIX needs to break above 1656. That was the open and the high of the day, and it was the high yesterday. The moment it breaks its leg C down, and you can see the inversion of the XIV is coming down. Okay, so I'll go through some of these again. I'll talk about, I think we're going to make a peak D in the weekly chart of yields of the 30-year and the 10-year. Those are the things I want to talk about. And just absolutely, not briefly, but I do want to give this its time, because I brought this up in terms of my wave, the Chapman wave methodology, with a SPY at 50, the 15-minute chart that I looked at for art yesterday, and that was a terrific signal to go short. That was number one. Number two is, if you were using, can you imagine the amount of money you would have made if you were using the Nadex platform? Because with the Nadex platform, what you would have done is you would have known what your stop is. I had 3 points on the E-minis as a stop. That's $150 if you were in the E-minis. But if you were using it in terms of the amount of money you are prepared to lose, that's your risk. In terms of reward, you would have stayed. You would have had that trade, and you would have gone even into the close and made really good money. Now, I'm bringing that up because on TFNN, if you go to the front page of TFNN, you'll see there's a signs of virtual trading competition. Hey, this is the first competition we've had here. It's a 10,000 giveaway in cash prizes. But you've got to, by Thursday of this, a week from this Thursday, September the 5th at noon, you've got to have entered. Because if you don't enter then, it's too late. The following week, Monday, September the 9th, 9 a.m., it'll start and end Friday, September the 13th at 5 p.m. This is a fantastic way of learning, getting paid to learn, and this is paid in the sense that you will be using a demo account, and you'll be using, let's call it play money, but nothing about this is play. Only the fact that it isn't your money is play, but everything else is for real. Go to the front page. Check it out. It's a great deal. It's really exciting. You can learn. You can learn another process of handling trades, handling your risk reward. I think it's going to be very, very exciting, and I'm looking forward to showing how the Chapman wave methodology is able to assist you in your trades, whether it's a 1-minute trade, 3 minutes to the close trade, a monthly trade, like a long-term trade, not a long-term trade, a long-term position. I'll show you the techniques as we move into that competition. So I'm looking forward to it based on so many aspects of the Chapman wave methodology. Let's go to our first caller. We got Mike in Long Island. Hi, Mike. How are you?
Good, Basil. Could you look at telephone for me, please?
Yes. Now, this is very interesting. You remember we spoke about AT&T? It's now trading at 34.02, up 20 cents. What I said that there was a chance, and I needed a little more information at the time, but everything about it I said is I think that those dividend stocks had kind of had their day for now. That was when I was talking about it. And the high of 39, round number high, I forgot to print that in. The 39 round number high, I just forgot to type it in, was really important. Well, it has traded down to the 33s and is trading at 34 now. We will talk about it, an important stock to look at. We'll be back with Mike in Long Island looking at telephone, and I'll be back. Dow's down 78.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back. Basil Chapman, Tiger Conditions Hour, and we are looking at telephone. Let me just get out of this, and I'll be right back to telephone. Now, what's really important about telephone is that that top, that high, that round number high of 39, coincided with a peak E. That's a peak D in the monthly, a peak E in the weekly, and let me just move this across. Oh, I lost all that data. Let me just do it. It'll be real quick. 3224. Here we go. A, B, C, D, E, F, A, B, C, D, E. A peak E in the daily, and it had a close of 39. And a high of 39. Isn't that amazing? All right, so that's a down move there. So this is what I'm looking at here. There's a little bit of a bounce being attempted today. It's made the H pattern. There is a chance that telephone, now as I look at this, if one was in this as a long-term buy and hold, looking at dividends, and you've had it for a long time, I'm going to say, you know what, and up until now, I would not have been talking about anything other than to maybe add a little bit or take away a little bit on each of the moves back and forth in the range. At this particular point, there is a chance, based on the MACD and the stochastic in the weekly and the daily chart, that if telephone is not able to get to the 3512 to 3549 level, sorry, 3487 to the other 3549 level within 2 weeks, but instead takes out the 33 level, it's at 33.96, no big deal to go down 95 cents, but it'll be a big deal chart pattern-wise. I'd be looking at this and I'd say, you know what? The risk to reward, if you're treating this as a dividend stock, is not worth the risk. Now I'm going to say, hi, Mike, what are you doing?
Well, you just answered my question. Is that the same for Verizon, too? Are you seeing
They're
that?
a little bit different charts, but I suspect that I need to put them in the same categories. Now, why have I lost all my notation on my Verizon chart? I'm going to have to call TradeStation today. I've had it now. A, B, C, D, E, F, maybe a G. They're different patterns in that Verizon was much stronger. But I have to tell you, when I read, Dave White is probably the person to call at some point and just talk to him about the communications area, all the Verizons, the Comcasts, the telephone, just to go into in detail to find out, because I think there's so much competition. My suspicion, just from young people that I know, there are so many that now don't have landlines. I think there's been a secular change in the whole industry. So I'm going to say to you, Verizon is much better. If you're in Verizon and you're holding it, I would have to say, just based on my eye, the doji candle of the week of the 15th of February of this year, between 44.78 and 44.11, is trading right now 46.84. VZ down just 10 cents. I'm going to say that if it takes that out, I would be very careful with these stocks. And here's my reasoning. The whole dividend plays have really had spectacular moves. That's the Procter & Gamble's, the defensive stocks, not the defense, although they're having to come up and as we speak, but the defensive area. That's like the Colgates, etc. Many of those charts look like they're going to take a bit of a breather here, and it might be a lot more than that. So I'm putting this into the category of the safest dividend plays that have been there. They will probably still be in the longer term, but there's some correction going on in the industry that I'm looking at. I'm trying to assess it. I don't know enough about it. I'd like to get the opinion of an expert like Dave. I'd like to find out more about it. But the chart pattern is saying that the peaks that were made in the monthly charts of Verizon and AT&T cannot be ignored. There are serious peaks. There are peaks that might have time and price. It could, in fact, turn out to be, you know what, give me 1 second. I'm going to just do Verizon again here. Oh, man, this is getting very tiresome. I don't even know when I lost that chart or why I lost it. It's A, B, C, D. Then a brand new A, B, C, D. I'm calling it a peak D in the monthly chart. And let me see if there are any round numbers here. Weekly chart, 54.31 on either side. No. At the top, 54.31. No. So what I'm looking at here is absolutely imperative that you monitor the downside, not the upside. Obviously, upside, if Verizon just suddenly spikes over the next 2 weeks and goes into the 48.5, 49 area, that's excellent action. But on the downside, I would lighten up the moment, I'm going to say, at the moment Verizon cuts 46, goes to the 45s, anywhere in the 45s, I'd just be lightening up. That's the way I would look at it. And then I would maybe lighten up again and on a bounce that takes out, and if they're lower lows and lower highs, I'd be very careful. Why? Because this could go all the way down to between 41 and 39. And if it takes out 39, the 200-period moving average in the monthly is at 36. That's a 10-point decline. I don't want to risk that. I'm just saying I'd be very careful. So I hope that helps you, Mike.
Yeah, great. Thanks again, Basil.
Thank you very much. Let's go to Alex in New York. Hi, Alex. How are you?
Okay, Basil. CNDO. That's
Yes.
Coronado Biosciences, which is right near you. It's in Burlington, Mass.
Oh, okay. What do they do?
Well, it's biotech, and they have 2 drugs in the pipeline that they're going to be reporting on in a biotech conference in Greece on Friday. And I'm planning to sell it that day because I have a nice paper profit, and it's either going to go down or it's going to go up on Friday.
So, okay, this is what I'm looking at. Let me just tell the listeners what we're looking at here. We're looking at a peak C, which is a peak C minus in the weekly, and it's holding the 200-period moving average. It's using that 200-period moving average as some kind of, I would say, some kind of support, but it's done it 3 times, and now it's on the 9-period moving average. So far, on a technical basis, it looks like it's in a trading range, just in a holding pattern between a big percentage move between 7.29 and 10, say, call it $10.15, but it's a trading range nevertheless. But I'm intrigued in this because the monthly chart has made a single leg A up. This is the first decent move it's had, and it's gone from the $4 round number $4 low to a high of $12.70. Now this is going to be very interesting. The way that you've done it. So did you get into it just in the last few days?
Oh no, I'm holding it with over a $2 profit.
So then what would you do to sell it? Are you going to sell all of it, or just a part of it, or what?
No, I'm going to sell all of it because they had an issue under the SEC, a forward-looking announcement that they're going to make on Friday that says it's going to affect the stock price. Now, they don't say whether it's going to affect it going down or going up, but if it took a pop up, I'm going to take my profit, and if it goes down, I'm going to take a smaller profit.
Okay, all right. Now I understand exactly what you're talking about. You know what? I'm going to make a suggestion here. If you are looking at the chance of a really nice gain to the upside, however, that same gain to the upside could in fact be a drawdown, then this is the way I would do it, because you have a really nice profit. I'm going to suggest that you take quite a bit off right now so that if it pops up, you're in a beautiful position, because it'll sort of make up at maybe a third of what you've taken off, or 2/3 even, for nothing, because all you've done is you've held the stock, but you've got a gain from it, but you're not risking giving back maybe up to 25% of the gain. You know what I'm saying? And that way... I look back at the volatility in the stock before. It trades on rumors, frankly. Well, I can see that. I was going to talk about that. But it also does something else, and that's the reason why I was impressed. The moment I looked at this chart, CNDO, and it's Coronado Biosciences, Inc. Now, there's a company that in the Massachusetts area that just went from, I think, the $7 down to the $2 because they did not get there. They thought everything was settled with the FDA or whatever, and they didn't get through. And that stock just plummeted. So we know that biotechs have a tremendous risk. I'm going to make the suggestion that says today's Tuesday. You say it's Friday that they're going to that at least some announcement should be made, right? Unless something happens beforehand. Yeah, and we should know it by the opening, because this conference is in Greece. Okay, so here's another way to look at it. It's at 8.52. As we're talking about it, somebody's saying, "Hey, this is a nice chart," and they've just pushed it up a couple of cents. So it's this is light action. Let me just check. 413,000 stocks yesterday, 116 volume today. The reason why I liked it when I looked at it is because when it has a move to the upside, it has a concerted move in the weekly chart. When it went from the low of $4.95 back in the week of the 13th of January, it went all the way from the about $5 all the way up to 10 round number. That's a big percentage move, and it took all of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 10 or 11 weeks. When it came down to the that was $3, huh? Now, $4, the round number $4 low on the week of the 16th of November. It went all the way from the middle of November of last year, all the way to $12.70 in April. That's not just, see, what I love to look at when I'm looking at especially these very low-priced biotech stocks is that there's a cycle, and that cycle has U-shaped patterns, and invariably it's as if news announcements are planned on either the paying of one of their I don't know whether I can call it the board or one of their insiders, but it's usually planned around a way of giving stock to someone instead of salary. I think that's pretty much the way it works often. And then they spike the price up. The person gets those options or gets the shares or whatever it is, and then it just comes straight down, waiting months before the next U-shaped pattern, and then it spirals up for just a real quick, it's almost like a news-related emotional response, and then it comes back down. This is different. My eye says that there's a product here, and that the product is a viable product. I cannot say anything about FDA approval. How do I know? I know nothing about that. I'm just looking at the chart. And the reason why I think that your concept of what you want to do is actually great. I'm just trying to strategize it for the best risk-reward money management, that's all. But this is a stock that if it does move higher, and it can't spike, it has to spike and close. If it can close above 958, which for a news-related event shouldn't be a big deal. That was the high bar of the week of the 16th of August. This thing should, in fact, continue higher and make that U-shaped pattern, trying to get to the elusive peak D, which had only made a peak C, and then pull back. And it's made peak C 3 times already, twice before pulling back. It did that on the rally that started back in January of 2012. So you can understand what I'm looking at. I'm looking at something that says, am I looking at a news-related stock that just has these, certainly over the last week, it's gone from peak A to B to C to D, and then a spiral higher all the way to 1020 on the 6th of August on the daily chart, and that was E, and then it plummeted and gave everything back plus. Now it's starting a brand new run. And the level to watch right now is $8.94 to $9.10. That really tells me the story. Okay, here's my thinking. The reason why I'm making a big deal about this, I'm writing it down as a stock that I'd like to follow. I don't know if I want to buy it yet because you got in at the best price. But I'd like to follow it. And here's my thinking. If this thing can rally and can close above 875, that was just yesterday's high, and it can do that by tomorrow afternoon, I'll feel even stronger about saying to you, take a little bit off. It's just good money management, because if it does spiral up on news, you've still got a big chunk with your core position. You can even start trading it on a different basis completely, saying, I'm going to stay with my core position. At some point, I must take profits, and then I will put that money back as a trading position. And then if it fails and it slips down to $7.50, you've taken your money off, some money off in the 8s. You're still in a good position. You can reassess. So I'm just saying that's my money management theory. But I still like what you're saying. You're prepared to give up 3/4 of a point, maybe, or even a point as a risk, because there's a chance that it will break out and move higher, and then you can make a decision Friday morning. So I'm so pleased you brought it to my attention, Alex, because this is a stock worth watching. I personally don't think I would do anything right at this moment. You got a great entry, but I'm going to keep it on my list. So good luck. Hey, let me know how it works out. Give me a call Friday and tell me.
Sure thing, Basil. Have a good day.
And congratulations for holding it so well. Alex in New York looking at CNDO, and that is Coronado Biosciences, Inc., trading at $8.51. I'll be right back. Dow's down 101, S&P's down 60.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern. on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi folks, Basil Chapman, Tiger Conditions Hour, and did I just hear Nico and Paige next? Well, listen to the program here at TFNN. Don't forget to go to the front page of TFNN and check out that $10,000 cash awards. I mean, this this is great. So what we've got here is the Dow is down 100, S&P is down 16. Let me just go through these things. Why it is so imperative for me to stay, no matter what was being said on all the different news channels about how people are just a little bit cautious, but you got to stay in position. You got to be long. You got to this and that. I was not prepared to listen to that. Why? Look at the New York Stock Exchange and the Chapman Wave methodology where we look for peak D, E, or F. Look what happened at peak E at 96.82 back on the, that was July, I think, July the 24th. Look at the technicals, the MACD and slow stochastic. If you're looking at Tiger TV, look at it when it made peak F at 96.89 on the 2nd of August. Horrible. And now it's coming down. If the New York Stock Exchange takes out, which I believe it will, 93.21, I'm going to see, just to be safe, if it closes under 9300 at any point this week, it's going down quite a bit. So it's going to be very important for me. And 94.35 is a very strong resistance, 9-period moving average resistance. I'll talk about the weekly chart at the end of the week, but right now, the weekly chart is saying, yep, there's a double camel hump that I talk about with the peak F, and then I'm pretty sure it's going to turn out to be a peak G in the weekly chart, and that'll say, yes, you've got to be careful. V-shaped pattern says you can pull back at least 50%, so that would take it down to the 92 to 9100 area on the weekly chart, and the monthly chart has not yet made leg D, and I believe we will make leg D. So that's going to be very important. Let me just... okay, next. Let me just do that. Okay. Oh, did I type in there? I didn't type in there. Let me just do that again. There you go. Got that out the way. Okay, here we are. So this is it. Now I want you to spend just a moment on these charts here. I will be back later in the day to talk with Tom for my interview this afternoon. It's about 4:20. But in the meantime, it's Tuesday today. Meantime, the TYX, the weekly 30-year Treasury, I spoke about this last week, spoke about it again yesterday, but here it is. I believe that at 39.30, we're going to be looking at a peak D top in the weekly chart, which says that we could come down here, but very often you go D, and then you might make an E. And then that's going to be really important all the way around. But in the meantime, we've got a potential for a top, a short-term top in the weekly chart of the 30-year and the 20-year, as well as the 10-year, the 5-year. The 30, the 10, and the 5. Now, what's really important about this chart is there has been breakout strength, and you cannot ignore that. So that makes 37.41 right now, 3.74. That makes the 36 to 35 area absolutely imperative to hold. If you are looking just at the price, I'm not talking about whether it's good or bad, I'm just talking about the price. Hey, look at this. This is the VIX index and the, I think I mentioned this earlier, XIV. So the VIX has to break above $16.56. As soon as it breaks above that, this market will be going down for the next leg. But in the meantime, it's holding well. That says, yep, there could be a little bit of a balance in the market. Here's the chart that's most important. The UUP, the dollar, is still not rallying. It's at 21.95. It's holding that trend line. Can it rally from here? Well, it's just in a trading range as it stands. It would have to rally. It's at 21.95. It would have to get to 23.50s for me to be impressed and call it a breakout by the dollar. UUP is the thing. Now here is the most important thing. This is a trough C, potential trough C in the TLT weekly chart. I'll spend more time on this tomorrow when we look at it, but in the meantime, I wanted to show that as we're going to go out, I'm going to say, most importantly, the Dow must hold 14,750 to 14,770 on any pullback. Resistance is very strong at 14,890s. I'll be back this afternoon, but thank you for being here.
Profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.